Yeah. Here's my cue. Time to start. Let's get a roll in here. It's a happy Halloween, by the way. Okay, stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Happy Halloween. Leo, I was talking to Leo. Leo has a restaurant and a sort of a drive called Wilton Drive. Or Avenue, is it Drive or Avenue? I think it's Drive, but it's a big, full of nightclubs and restaurants, and they have a big street party there, and Leo's going to work it, selling pizza to to drunk people.
Lot of people, lot of happy people.
Yeah, man, we'll have a good day there, man. That's going to be exciting.
Yeah. Thank you.
All right, go ahead.
Okay. Oh, thank you.
Oh, you're welcome. You're very welcome. I wished I was there. I'd come by and see you. All right, well, let's just kind of take a look at what's up in the markets. First off, let's start with the economic calendar. Oh, let me give you my fancy little slide that I built. So we know now, you've been hearing me talk about this. The Fed is meeting tomorrow and Wednesday at 2 p.m. Eastern time. They will announce an interest rate hike of some sort, probably 75 basis points. And then later, around 2:30, Fed Chair Powell will start to speak. So that whole hour of the day from 2 to 3 could be very volatile. Nobody knows what he's going to say exactly. If there's any sign that if inflation is peaking and the languaging comes out that the worst is over, that the interest rates are starting to take hold, we don't see any evidence of that yet. But anyway, the point is anything can happen on Wednesday at 2 o'clock. And so with that, we need to be careful. Right? There's nothing wrong with waiting a few days until after the announcement to make sure that this potential landmine is out of play. So there's that. That's something that is coming. We need to be aware of it, and we need to take caution at least until after the announcement. So that's a general risk management rule. Now let's take a look at the calendar for the week. Of course, the Fed announcement is shown right here. At 2:30, Fed Chair Powell's press conference. We have tomorrow the Producers Management Index, which is an indication of contraction or expansion in the manufacturing process. So that's a potential market moving event. If it shows more contraction, more inflation, or vice versa, we could see a move. Job openings coming up, construction spending, the employment reports coming out Wednesday. We've got rental vacancy rates for real estate, the announcement, the jobs reports come out on Thursday, and then non-farm payrolls on Friday. So there are always these types of alerts each week, and sometimes they can move the market. It's always a good idea to keep an eye on them. Now, of course, the Fed announcement is the most important thing to keep on your radar for this week. One thing I like to play with on the announcements is Fed announcements is I'll buy a Wednesday straddle on Wednesday right before the announcement, and then maybe catch a move. And if it doesn't move, I sell it right away. It's kind of like I do it for fun. It's not something you can back test, but it is fun. So the idea there would be that, let's take a look at the SPYs, for example. So on the SPYs, right before the announcement, you buy a Wednesday straddle, which would be the 2nd of November, and you just buy a straddle and hold it for 30 minutes or so, and then pull out. So that's a fun little thing I like to do. I'm not saying that anybody should do that, but it's fun if you're looking for a little bit of post-Halloween fun. That's a cool thing to do. All right, here's the sector spiders. And over the last month, the market has risen, the S&P has risen almost 5%. Okay, that's the what's so. Energy has led the charge pretty much across the board, other than communication services, discretionary, and utilities. Everything has been bullish over the last month over the last 5 days, everything bullish except for communication services. And then as of Friday, everything was up on Friday. So let's hop into the futures and take a look at some of that stuff. So I got my futures loaded here. Let's just go through some of this stuff here. Let's start with the S&P 500, the /ES. And this is where we are now. We're down a little bit. We're down 0.5 percentage point. Today, I would expect the markets to kind of stay flat, maybe bounce around a little bit, but I wouldn't expect there to be any solid moves between now and Wednesday, sort of like deer in the headlights, wait for the news. Markets will probably just kind of hang out in the body of this this bar on Friday until the announcement on Wednesday. Interestingly, on Friday, the S&P 500, look at support resistance, everybody. It hits and closes, actually it closed at 38. Hold on a second here. Let me see if I can get my glasses out. 39.25, there was a breach of 3,900 and a close there on Friday. And now the markets are back down below 3,900. So this 3,900 level on the futures, also the SPX has the same price points. We've got a strong resistance right here at 3,900. And that's exactly where, just below that is where we're trading right now. So that resistance level will likely hold between now and Wednesday, and nobody knows for sure what's going to happen after. The doom and the gloom still persist. Recession, high inflation, poor earnings. Microsoft, Meta, Amazon all had bad earnings last week. All of them tanked, and in the market, yet the markets rose. It's very perplexing. I like to watch Bloomberg and CNBC in the morning. I don't have a TV, so I watch it on my computer, and it's just funny to hear them all perplexed, like, you know, major tech companies taking it on the chin last week, and yet the markets did this. It's a little perplexing. It doesn't make a lot of sense, but it is the what's so. We trade what we see, not what we feel. I feel certain things, but I'm just going to trade the patterns that I see. And to the best of my ability, our ability, predict what might happen tomorrow. That's this game. It's not a 100% game because, for God's sakes, we're predicting the future. Nothing, we don't know what's going to happen tomorrow for sure. So there we go. That's the S&P 500. Let's take a look at the Dow. Look at the Dow. This is /YM. The Dow. I mean, massively bullish. And the Dow actually on Friday closed above its 200-day average. Okay, that is telling, right? I mean, now we did it over here before and it failed. I would think that would happen again, but it's not. Why is the Dow rising so much more than the S&P 500 and even the NASDAQ? Tell me what you think. I mentioned this last week, if anybody remembers. But look at the tech. I'm going to let you answer that in a second. Look at the tech heavy NASDAQ. You know, we know what happened to Microsoft and Amazon and many other tech stocks. The tech sector, the heavily laden tech index, the NASDAQ, isn't participating in a bullish fashion like the Dow. The Dow's above the 200-day average. The NASDAQ is well, it's below its 200. It isn't even above, I'm not 250. It's below its 50-day average. Strong resistance right here at 11,700. Strong resistance. The Dow isn't doing what the NASDAQ isn't doing what the Dow's doing. Why is the Dow so bullish? Anybody know? Anybody got an idea why the Dow is so bullish?
Benefit from the higher interest rates, and the tech companies are hurt from the higher interest rates.
Thanks.
Yeah, I would say that you're on the right track. I would say it's the financials. So bank stocks are rising. Remember what happened to Visa last week? Visa is now above the 200-day average. That's a credit card company. And guess what? They're benefiting from higher interest rates and consumers are still spending. So Visa's up, MasterCard up, American Express up. not as much as the others. We can look at some banks like JP Morgan, Chase, above the 200-day average. So the banking sector right now is a bullish sector. And we've been talking about this during the decline. The interest rates environment was lifting, but the markets were contracting. And we knew that at some stage that banks would start to benefit from higher interest rates. So banks make money by lending money out at one rate and borrowing it at a lower rate. That's how they make money. Higher interest rates, more money. And consumers are still using their credit cards, still taking out loans. So financial sector right now would be a good place to look for some bulls. So we may do that later. Let me take some notes here. I get up a little early in the morning, and these are some stocks I'm looking at. XLF, bank sector. Or that's actually financials, not just financial sector. So we'll look at that in a bit. Maybe we can find some opportunities on banking stocks. Perhaps a long-term bull put spread is in order. Say it ain't so. A long-term bull put spread in this market? Yeah, on banks, definitely. Let's take a look at bonds. I was also listening to Bloomberg this morning, and bonds are starting to pay more money there because of interest rates. The bonds in circulation do not benefit if the interest rates rise because their coupon rate is lower than the ones that are being issued afterwards. So that drives the price of bonds down. I would expect bonds to drop into Wednesday, and then from there, keep an eye on this. At some stage, money's going to start flowing into bonds because they're paying more money. They're more valuable. So that's something to keep an eye on. Don't see any evidence of that yet. Similar to financials, which are benefiting from higher interest rates, bonds will too, eventually. Okay, so what else do we have here? Let's take a look at oil. Oil's volatile. It always is. It moves around a lot. It's got a lot of external forces. The price can be manipulated by OPEC. It's a very volatile instrument. It's also impacted by demand. If the US dollar gets too strong, oil becomes more expensive. Inflation, cost of gas more expensive. So demand, OPEC, there's so many moving forces. It's a little tenuous to predict where the price of oil is going to go. Remember here, what happened was OPEC came out and said they're tightening supply, and then we got a little pop, and then we're back into this volatility. Us hedge fund people have a trade on this one that profits if the stock rises and profits if the stock drops. And even if it goes sideways, we'll make a little bit. So that's the world of broken wing butterflies. If you're in hedge fund, you'll know all about that. So that's oil. Let's take a look at the UUP, the US dollar. Okay. A little bit of volatility, choppiness here. US dollar got weaker. US dollar rises with rising interest rates. That will happen on Wednesday. A solid prognosis between now and Wednesday, maybe for the next few weeks, is bullish on the US dollar as we lift our interest rates here in the US. What is that doing? To see pre-market, let's call it, we're slightly higher on the US dollar pre-market. It closed Friday at 29.78. And now we're trading at just shy of 30. So the US dollar will open up right about here on the open, which is in about 16 minutes. Okay. I got a chart I've already built, and this is a chart of gold and UUP. UUP is the black and white bars, and the green and red are gold. The UUP's gotten stronger. That's driven the price of gold down. That inverse relationship is intact. I'm looking for gold to rise while the US dollar is going sideways or as well rising. So in other words, when this inverse relationship is broken, gold will be rising. Of course, gold's rising. The US dollar isn't dropping. That's a sign of risk off, meaning that money is flowing out of stocks into safer instruments like gold, silver, and perhaps even bonds. All right, that's a general overview. What else? Let's look at Bitcoin a little bit. We should go out and do something on Bitto, I think, today maybe. Here's Bitcoin. Break out the paddles, man. Bitcoin's hanging around 20,000, just doesn't want to go anywhere. If you look at a longer term chart, let's do a monthly chart, weekly chart, excuse me. You can see that Bitcoin has been extraordinarily volatile here up to here, and then it's sort of flatlining now. So when I see stuff like that, then I say, well, what if I could look at a stock that tracks Bitcoin like Bitto, and we could trade this sideways? How? Well, with two credit spreads. Credit spread up here at 15, credit spread down here at 10. I don't know. We could do a little more analysis, support resistance analysis, but Bitto is a sideways stock. So opportunity there for us. Let me put that on my sheet. There's always trades, always trades, always there's a trade, many trades typically. All right. One thing I want to tell you about is earnings that are coming up this week. I'm going to go to a website here called Finance. Actually, here's how I search for it. Yahoo earnings calendar. And check this out. Look how many earnings there are this week. 282 today, 507 tomorrow, 793 stocks announce earnings on Wednesday. On Thursday, 1,006 companies announce earnings. Friday, 208. There's just a boatload, well over 2,000, 2,500 or so, if I do the math roughly in my head. But they're almost 3,000. There's a lot of earnings this week. And if you want to dig in and find some of them, you can by drilling in to each day of the week, and you can see, lots and lots of earnings announcements this week. Okay. Now the tech earnings were bad last week, and if we get more bad earnings, that'll have an impact most likely on the markets. So there you go. That's a general overview of the overall markets. Let me see if I want to talk about the VIX as well. VIX futures /VX are up a tiny bit. Okay, so that's because the futures are down a tiny bit, and we look at the overall VIX. Let me go to back to a daily chart here. Look at the VIX. Okay, this is good. This is good for our straddles, right? Because now if you're in earnings, the VIX is dropping, so it rose a little bit today. And we've got cheaper options. They're about mid-price. This is cheap. This is expensive. So we're about mid-price on the options expense meter, the VIX. So that's good. We have a bearish broken wing butterfly on the UVXY, which is a VIX instrument, and that thing's paying us right now. We'll look at that one tomorrow. All right, what else did I want to talk about? I think that's most of what I wanted to cover. Let's go through our portfolio here. We've got 12 minutes, and let's just go through these quickly. Here's a trade that we put on BABA. This was a 1-week trade. I don't know if anybody did this one, but this is a case where if you want to trade these, man, you got to be able to take the heat. So the bulldog ran up to the break even, the chain stopped it, it hit resistance, and then fell away and ultimately expired worthless on Friday for 14.94% in 4 days. That's the sniper approach. Bad news. Come in, sell where you don't think the stock's going to go, profit. And my gosh, this is interesting. The IV has not dropped. Oh, wait a minute. That's surprising. And it's surprising, but also it's an opportunity. Look at this. I'm going to show you the IV on BABA. Wow. The IV rose more on BABA. The beatings happened. The stock vacillated beneath the break even, and IV rose. So my next thought is, well, why? Why didn't the IV drop? Well, demand for the options, something's up. Volatility expected. That's massive, massive implied volatility for a stock. Well, let's take it to the day we entered this one. So we entered this on 10/21. Oh, yeah, we actually entered it during the day. This is when we entered it. And the IV was 96. Okay, bad news. Stock got hammered. Just got decimated. And the IV was high. And today, the IV is not at, let's call it 97. See that? 90, that's the IV. And today, the IV's up at 278. What? Why? That was the IV we entered when we entered, and this is the new IV. So something's up. You can write this down if you like. IV ain't there for no reason. Why is the IV there? Does anybody have an idea? If you
Mike,
know, yeah,
is that going to reflect IV today or Friday?
that's Friday's IV. That's Friday's IV, not today's IV, but even Friday.
It was Friday expiration.
Yeah, but that's still that, you know, that wouldn't create this much IV. IV was here when we entered, it dropped as the stock dropped, and then there's something up with BABA. So I'm gonna go take a look and see if I can uncover any news. You know, you'll see this a lot on pharmaceutical stocks. Right now, I can't remember the one we looked at like a month ago, but you'll see farm stocks. Who was it that had that super mega wide iron condor? Was it you, Paul? I can't remember. Anyway, the IV was super high.
It didn't work.
What's that?
It didn't work. They were waiting on approval. They didn't get it. Stock went from $10 to 50 cents.
What was the stock again?
TCDA.
What?
TCDA.
TCDA. Oops. Dyslexia. Yeah. And so this on this day, let's take a look here. This is really an important thing to grasp. The IV TCDA, and let me overlay the IV. This is the average. Let me get rid of the moving averages here. And let's look at the IV. Let's overlay the IV. And this is a similar case with Google. I'm sorry, BABA. So look, before, let's take it to the day. Let's see, let's go back to 10/20. I don't know, doesn't matter. The IV was so high on this one. The IV was at 600 and the stock wasn't doing much. Let's get some more data here. Let's look at 150 days of data and you'll really see it now. So the stock was essentially flatlining. It was a little bit volatile, but this is like 50-cent increments here. The stock wasn't really doing much, and the IV was spiked up to 600. And then we talked about it, and then after the announcement, it wasn't clear there was an announcement. You can't see it in the news unless you dig. But the IV was so high, and then the FDA came out and didn't approve their drug, and the stock's trading at 50 cents. So the iron condor was beautiful, but the IV was not there for no reason. And the news came out shortly after, and then the stock plummeted. So when we look at BABA now, the same thing is up. Something weird is happening. Something behind the scenes, maybe not visible to us, but BABA, the IV's super elevated. So now I want to figure out why. Why is BABA's IV so high? And I might not find anything, quite frankly. Let's see. China clips US shares of China-based companies. So the China things is in motion, of course. I don't see anything here without spending minutes and minutes on it. Just wanted to see if there's some kind of other news. Weak data in China clips U.S. shares of China based companies. Okay, the U.S. listed shares of China-based companies took a broad beating in early Monday trading after data showed factory and service activity in China contracted in October. The iShares China large cap ETF dropped 3.1%. Now the IV we're looking at though is from Friday. Let's see, e-commerce giant Alibaba holding shed 1.5 set ahead of the open toward a 6.5-year low. NEO, another one. Let's put NEO on our list. No, I like that IV. I want to sell it. I would love to sell it, but I don't know what the stock's going to do. All that IV. I'm just, it points to the same thing that TCDAA did with its IV. That IV is there for some reason, and I haven't been able to figure it out. I could dig further, but what it means is directional risk. The stock could gap up, down, who knows? And so for that reason, it's a hold, quite honestly, unless you want to gamble a little bit. If I did anything here, I want to sell that IV. I really do. If I did anything on it, it would be to sell more credit up here somewhere. But the IV is astronomical. I'm gonna say we hold on this because I can't figure out what the stock might do next. If anybody has another opinion, please share. So that one was what, a 15% profit in a week, a sniper candidate. I'm just going to go down the list here. The next one is Chevron Oil Energy. At the time, didn't seem like it had a chance. What we did here last week, what's called battened down the hatches. What I did was contract the upper spread and then add another spread underneath to flatten out the delta. So you can see this red line is vertical. And so this basically stops the bleeding. We can only lose another $45, or max risk on the trade is 405. So worst case, we lose 405. We're currently down, excuse me, we're currently down 353. So what, 50 bucks more risk approximately if the stock hangs that up here. But now I've got time to wait. We can see what oil is going to do. I don't have any directional risk for the foreseeable future all the way to the green line. That's 16 days from now. There's really not much that's going to hurt us other than the stock really continuing a solid bullish run or dropping back down here. So it gives us time to wait and see if we can recover. I've done this with my own long-term credits on Walmart in particular, and I did this exact same thing, and I was able to generate a profit in the end. And it becomes a crapshoot. You don't know where the stock's going to go, and you just got to monitor it. And if the stock starts hanging out in here, you can conceivably make a little bit, which is not what I want. I just want to lose less on this risk management. I talked about this with Larry last week. If you saw the, I don't know which call it was. I can't remember. Probably the hedge fund call. Okay. Google. Let's take a look at Google. There we go. It's getting hot. George, did you say you sold a put spread underneath?
That was on Microsoft.
On Microsoft. Similar story.
Yeah, I did. I started out with call spread on the top, and then when Microsoft got a little richer, I put the bull credit spread in at the bottom.
Yeah.
And I'm at small profit right now.
We might do that. Let's see what. Let me just do a little bit more analysis on Google. Let's check the volume out. So now, so before I even do any updates or adjustments, the way you trade these right out of the can is you hold until the stock either generates
Market's
until you
open.
can, yeah, so you can grab 90% of the original credit. So you have a GTC order in to buy it back for 10% of what you sold it for. So an order out there to buy this back for 2 cents is out. And you do that if for a profit. And if the stock closes above the break even, then you exit for, in this case, roughly a slightly lower than a 200% loss on this trade. What Google's doing on the open, we're now open. Let's see. Yeah, Google's down a little bit. It's hanging around 95. It's lower for the day. It's down. Now it's popping back up here. We're pretty much close to the close on where we're down 0.5%, 0.4%. So it's hanging out below 95 currently, 96. Now our break evens up here at our short strikes up here at 98. And the game here is to just hang and follow rules. There's a fine line between following rules and adjusting. And I was talking to George before we started, and he was looking at a straddle that has on PayPal that has an exit coming up this week. He's down a little bit. And the question was, what should I do? And if you're ever confused about what to do, then simply follow the rules that you used in your backtest. It's that simple. Take your losses. These systems produce losses. This one in particular, the short-term credits, you're going to lose more often on them than perhaps other strategies. Now, you'll on balance with the way we do them, you should have about a 75, 80% win rate, and your average gains will be slightly smaller than your average losses. Maybe like you lose 1.5 times your original credit if you follow the rules, and over time, that system will generate profits. Consistently, it does. So we've had good luck so far on these, and we've had no losing trades on the snipers yet. And these might end up being losing trades, but for now, it's a hold. I'll maybe come back and give you an adjustment idea here in a minute. We have a long-term bearish broken wing butterfly on regional banks. Now, after all I've just shared with you, banks are starting to rise in this environment. Their earnings have been good. So now I'm a little less, I'm not as bearish as we were when we entered this trade on 9/26 over a month ago. Banks were down here and now they're starting to rise. Let's take a quick look at KRE and let's see what it's doing right now. Okay, so it's finding resistance right here at 64. Now, what there is to do now is to think about, well, do I think that banks are going to drop from here now? There's no sign of it. We do have the Fed meeting on Wednesday. Maybe we wait until after Wednesday. But what I'm thinking here is, why don't we go underneath and sell a bullish credit spread underneath and get more credit? Let's just do it just for fun. I want to wait till after Wednesday to see what the Fed actually does. So if I look at a chart of KRE, where do I want to sell? Well, I'd like to sell down here at 56, maybe 55, maybe a little lower. Let's just see what's available in terms of credits. December 16 is our expiration. So I'm just going to take a look at the live prices for December 16, and I'm going to make this a vertical spread in the Thinkorswim environment. And then I can just kind of scan down this list here and see where the credits, how much credit's available. Okay, so where did I want to sell again? I think it was 55, right? Yeah, let's look at 55. What can I get approximately pre-market? This is now market, but pre-Tom's Tools. What's available if I sell at 55? Selling the 55, buying the 54. There's 4 cents of credit on $1 spread is 4 cents divided by 96 cents, which will be the risk. So the risk in this trade, without a risk graph, I know, is the credit subtracted from the width of the spread. All right, so the spread width is 1. I can get 4 cents. I might go for 5 cents. Slippage is wide right now. That's okay. And then my risk would be 96. So roughly speaking, I've got about a 5% potential credit down there. And that 4 cents is added to the credit here. And that 4 cents will lift this break even up by only 4 cents. So I'm not terribly excited about that 4 cents. It's not a lot of money. So when I start thinking about that, it's all right. Well, let's go up a little bit more. If I go to the 56.55, there's 9 cents. That's better. There's 9 cents of credit, which would be 91 cents of risk, which is 10%. Yeah. Yes. That's the one I'll take. Now, yes, it is not as far away as I wanted, but it's a point away. So the next thing I'll do is widen it so I can contract risk out of either of these later. So let's take the 55 put and drop it to 54. And that's going to give me 14 cents on $1.86 of risk. So it's not 10%, but it gives me I'm sacrificing a little bit of ROI. 14 divided by $1.86 is not 10%, it's less, but I would rather take less and give myself the ability later to contract this spread and squeeze risk out of the bottom spread. So let's reflect that here in the risk graph. This is like another way to trade credit spreads. Credit spreads are kind of like a board game. You can put them around, move them around, widen them, shrink, contract them. We're going to sell the 56 and we're going to buy the 54. How many did we do? We did 3. Let's do a sell here, a buy here, 3, 3. Let's put a little green here for more credit. More credit. Risk graph. Now look at this. Your potential profit in the trade is now 26% versus 13%. You've doubled your potential return on investment. Your break even is higher now. The upper break even was 70.24, and now it's higher by the credit, 70.42. Okay, so I'm going to do this. 14 cents. Let's see if we can get 15. I'll reflect 14 cents here. And the fastest. So these prices I'm looking at are on the Tom's tools are from Friday. The current price for this 56.54 is 14 cents credit. 14 cents credit. We'll sell the 56, buy the 54 3 times for a net credit of 14 cents. I don't have to put individual leg prices in. The net result is a 14 cents credit. Let's see what that does here. And there's a nice little 23% profit in this iron condor. The lower break even is well below that peak there, or that turning point. If the stock starts rising, we could, and this put spread starts to lose value, we could buy it back for less than we sold it for and sell more and continue to stay underneath, getting more credit here. We could even take the credit here and lift up, take the profits and lift up this upper call spread. You could literally slide the iron condors around. Advanced stuff, I know it is. And so let's do this. I like this, and this will give us an opportunity to practice moving our credit spread pieces around on the board. Let's see if I can get 15 cents here. I want 3 of them. And let's see if we can get 15. This is simulated, of course. Doesn't necessarily. Oh, I've got too many open positions in my paper trading account. Darn it. I'm not going to be able to do any live trades here. Can somebody else try it? Tell me what you get filled at. I've got to clean up my paper trading account. Sell the 56, buy the 54, even in a simulated price. Could somebody go out there and try to get 15 or 14 cents and report back when you do? That would be great. Okay, we had an iron condor on Kohl's. I used to spend a lot of time in Kohl's because I would, I'd have to say the thing I miss about being in Costa Rica the most is Amazon. You can get a third-party service to forward them, things like that, but I used to buy Amazon stuff all the time, and even stuff I didn't think I really wanted, because if I didn't want it, I'd take it back to Kohl's and they'd give me a discount where I could buy more stuff. So Kohl's is a place I used to spend quite a bit of time in. And the stock, we had a sideways prognosis. The stock made a run, didn't reach it. The whole thing expired for 25% profit in a mere 7 days, 1 week, 4-day trade. We got in on Monday. It expired on Friday for 25% profit. I hope that some of you were able to participate in that. I'm going to mark this as a winner. I'm not even going to close. You don't have to close these trades out if you let them expire. So you can see there. I'm also interested if anybody's taken any of these trades and how you're doing. Okay, that Microsoft. Let me hit calculate. Let's go to the latest date here. Now that I don't know what I was doing on that date, 10/28. This is Friday's data. All right, here we go. Microsoft, similar to BABA. It's getting a little hot in here. Microsoft making a run. What's it doing right now? I don't know. Let's see. It's probably down a little bit, unless it isn't. Microsoft.
It's down at 233.
Yeah, it's at 233 or so, George. Yeah, it's hanging out. Our upper strike is up here at 240. You know, this is a rules-based system. You know, if nothing else, you follow the rules. Bad news. Credit spread where you don't think the stock's going to go. We sold at resistance at 240. You let this thing run, and until it closes above your break even of 240.46, you let it ride. Let it test resistance. Let resistance do its job. It's a strong level at 240. Look here, 240, 240, 240, 240, 240, 240-ish, 240. So that's a really strong level. And if you do nothing else, just let resistance do what it's going to do. Follow the rules. So far, we've not had any losers doing this. And then we had a Zoom iron condor. It got hot. See, same rules. Now, I did adjust this last week. I didn't actually fill them, so I didn't track them. You could have made a bit more had you lifted the bottom put spread up. So I did, I think it was Monday of last week or whenever it was, 14th. Yeah, I lifted up the put spread. I sold a bit more credit here. I think it was around 70. So you can do that, play that game, but without playing any games and following simply the rules, this one would expire worthless for a 20% profit entering on the 14th. It's a 2-week trade, 20% profit on Zoom. I think that is it for our current trades. Let's take a look and see if there's any train wrecks first off. This is what attorneys' offices do every day. They go out and they look for accidents. Let's look for some accidents. So what I just did, I can't run the scanners just yet in Tom's Tools. We can find these in Tom's Tools, but Tom's Tools isn't live for another 17 minutes. Let's go to 10% loss on the NASDAQ. So these are the biggest NASDAQ losers. And I'm going to sort by the biggest losers. Just click this net column here. And this one on SATX, that's a one, and it must have just IPO'd today. Oh, yum. This was probably a pharmaceutical announcement. YMABS Therapeutics, probably a little late. The slippage on this is going to be wide, most likely. I've never even heard of this company. And the slippage is gargantuan. So we can't trade that one. Dash, though. DoorDash. What's up with DoorDash? It's down. It's down 8%, trading at 43. This is one of these companies It's got earnings coming up on the 3rd. Not much we can do with this. I like that it's going sideways. Let's see why the stock dropped. DoorDash stock price cut to 70 from 105 at JP Morgan. So we got some price reduction targets, but the brokers have maintained their neutral or bullish rating on DoorDash. So that's earnings coming up. Not much we can do there, but if the stock continues sideways, then we can do some iron condors like we're about to do on Meta. I want to go to Meta here quickly. Let's go to top 10 losses on the New York Stock Exchange. What's up? What's dropping? Groupon. Now earnings is coming up though. Earnings is today. Oh, earnings happened this morning. Okay, earnings is out. Excuse me. Let's take a look. What are they saying? This is not Groupon, it's Global Payments. Excuse me. Groupon is GRPN. Global Payments, adjusted revenue beats revenue expectations while profits matches stock drops. So there must be some guidance that they lowered guidance is most likely what's happened here. Let's see. Just got to see if I can find it in the headlines here. Commission transaction and suggest, okay. BDS. So they had a good earnings announcement, but obviously they must have lowered expectations. Some negativity in here that I can't see just yet. Okay. All right, I'm gonna let you all look at that. If you can find some confirming news that the stock has lowered future guidance, some negativity in this. They beat earnings, beat revenue expectations. EPS, excuse me, EPS misses at 248, missed the 249 estimate. That's close enough, I think. Sales beat, they beat on sales. Reaffirms their outlook of 9.53. So I don't see any real negativity here on the earnings announcement. Could be some profit taking on this. I wouldn't trade this one right now. I'd wait to see what it does. Could be some short covering. Could be anything at this stage. So I'm a little bit worried about, not worried. Don't have enough visibility on that one. On semiconductor, nah. Okay. So let me go back to my list here. Oh, let me show you this stock. I ran the scanners this morning looking for stocks that were running hard. Northrop Grumman. Look at this one. It's extraordinarily bullish, has not participated in any kind of bearishness in the market. I like this as a bullish opportunity, maybe selling a put spread underneath, maybe a long-term put spread. Earnings came out here last week. Good earnings. Stock setting new highs. Let's take a look at a max chart and see. This is all-time high territory for Northrop Grumman. Upgrades here. Raises Northrop Grumman's price target, keeps equal weight. So they've got some price upgrades by various brokers. Space business is a highlight. Okay. Slides down, weak outlook. Sales outlook falls short, yet the stock's taking off. Weak outlook. All right, so that kind of spoils the party. I was like, man, all-time high territory on Northrop. This would be an interesting opportunity to sell a put spread underneath it. Let's just find one and see if we like it. These defense stocks are oftentimes defensive stocks, meaning that they are market proof. So let's just do a quick credit spread scan on this. I'm going to do a long term on Northrop. Let's see what the scanner says. Again, this is Friday's data. Okay, here's one. 85% probability of profit to make 15% over the next 84 days. We're selling the 470 put and buying the 460. So our line in the sand is 470. We want the stock, in other words, to stay above 470. Where is it right now? Let's hit pick 3. 470 is right here. Mega strong support level right here at 470. The stock is setting all-time highs. It hasn't suffered during the correction this year. It's gone sideways. That's a big one. Think about that. What have the markets done this year? Well, down from 4,800, that's the SPX, all the way down to 3,500. That's a massive correction. But Northrop Grumman, not so much. Sideways during this entire year. The year starts, where am I? Here we go. Northrop Grumman started the year around 394, 400, let's call it, and it has risen with the markets correcting in a very big fashion. So Northrop Grumman seems to be market proof, and we can now sell a credit spread right here at 470 and profit on the trade as long as it doesn't tank and it doesn't look like it wants to. It hasn't. It's gone sideways during this extraordinary bearish market we're in. So yeah, I like this one. I like it a lot. Let's take a look at the risk graph. Yeah, that's nice. That's real nice. One thing I may want to consider is selling at 460. Why is that? 200-day average right here. Let's drop it to 460 and see what we can get. I know I'm dealing with Friday's data, but the stock's up a bit. It's pretty much the same. So let's edit the trade and drop the short strike down to 460, which is the 200-day average. What can we get? I don't know. Let's see. Risk graph. It offers 11% with a probability of profit of 88% versus the original of 85%. Okay. So there's not much of a difference there. I'm going to go ahead and take the one that came out of the scanner and let's go for it. Hopefully you're following the logic here. Jan 20s, 470, 460 put spread. So let's just go see what's there right now. Jan 20. I'll change this to vertical. And again, I want to sell the 470 put for Jan 20 by the underneath. Wow, quite a bit of slippage there. It's showing $1.80. Wow. The $1.30 is $1.35 on Friday. So if I was able to get $1.80 on this, that's amazing, man. Let's just represent it in the Tom's Tools. Yeah. $1.80 represents a 22%. So if I can get that on a 460, let's see what the 460 will give us. A little bit lower. On the 460, we can get $1.20. And the one thing I haven't done is widen. I'll do that next. I haven't widened. I'm going to widen this one too. So let's do the 460. Oops. I'll keep it at one strike right now, and then I'll modify it a bit. Okay, so we're going to be able to get $1.20 on this one. So it's a little bit lower, right at the 200-day average. I got to take off the buy there. Okay, this one's offering 13%. Yeah, baby, 13% with almost a 90%, 88.7% statistical probability of profit if we're able to get 120. Let's also widen the bottom spread. It's a good starting point. Let's widen it, get a bit more credit and more risk than the other. Let me replicate it here. 440. And then risk graph, oops. Edit. So it's given us 225 on a 22-point spread. Let's represent that here. Risk graph. So this is what's available live right now. 12% profit on this trade over 84 days. My minimum is 10 or 11. 15 is good too, of course, but 89% statistical probability of profit. And that doesn't account for the fact the stock doesn't drop with the market. It's rising recently the market's been bullish, but during this entire time, the markets have plummeted, but Northrop hasn't. So there's more probability that the stock isn't going to collapse from here.
Mike,
Yeah, go ahead.
Mike, on KRE, I got 19 cents on the 56.54 put.
Okay, let me come back to you and I'll put that in. That's great. Thank you, George. All right, let's see if we can get 220 on this thing. We'll do one contract. Oh, see, I can't do this because I haven't cleaned up my account. I'm negative on my buying power. So George or anybody else, would you mind trying to get filled on the 460, 440, this one right here? And try to get 225, 220. See if you can get that. I apologize for not having I'm going to save this in demo. I need to clean up my paper trading account. Okay, so there you go. There's a potential trade for today on Northrop Grumman. All right, any questions about that? You see how why this is a good bullish trade in a bearish market? Any questions? Okay. So Andrew got Baba filled at 19 cents. Now I got to find it. Oh, that's a different trade. We were talking about KRE. Just looking at the quotes here. So let's go to the KRE trade here. And George, you said you got 19 cents for the 56.54 put spread, December 16?
Correct. It's Earl, not George, but yeah.
Oh, okay, Earl, sorry. Sorry about that. Nice. I'm going to put an adjustment here so I know it's been adjusted. Update. Yeah, 27% on this one is possible now. That's gorgeous. That is gorgeous. We'll see what it looks like here in a minute. What's KRE doing right now? It's kind of like boxing. KRE is just hanging. On the upside, we've got the 200-day average.
Mike, can you go back to that KRE? Because it looked like it started on 926 or something.
Yeah, we placed the trade on 926.
Oh, okay. I'm sorry. I've been in and out with patients. Okay.
Oh, no worries, man. No worries. So today we're on 1028. Well, it's actually Halloween. We just did it, but we're going to be adding another 19 cents underneath, and the break even upside has been lifted by 19 cents. It's not that much, but it's higher. So there you go. That's it's like boxing, really. I mean, stock starts to show some bullishness. We're bullish on banks, and because of that, we're going to come underneath and sell more credit. And the beautiful thing about iron condors is the broker will only use one spread for your risk. You can't lose on both trades. So what the broker will do is take the net credit from both spreads to calculate, that's your credit. And then it uses the width of one spread to calculate your return on investment. So the outcome of that is dramatically higher potential return on investment. So pre-adjustment, 13%. Post-adjustment, over double by doing an iron condor. So that to me is a gorgeous, gorgeous trade. And if you know how to do broken wing butterflies, think about doing broken wing butterflies up here right now. And maybe one down here as well. You can even use longer term broken wings. We'll talk about all of that tomorrow on the hedge fund call. Okay, so it's the top of the hour. Let's refresh the data real quick.
Giovanni was suggesting a vertical credit spread on PayPal for November 4, selling 101 and buying 102, Mike.
Okay. Let's take a look here. PayPal has earnings coming up. That's the thing I want to wait until after that happens. IV's higher. What were the strikes again? 100, 101, Gerardo?
101, yeah, 101, 102.
Yeah, I mean, that's a decent one. It's above the 200. Earnings is coming up though. And, you know, you got to, PayPal is in the financial sector, and they could come out with earnings that are benefiting from interest rate hikes. So I would not do that one just yet. Let's wait until after earnings, which happens on 11/3, which is what, Wednesday, Thursday, first, second, yeah, Thursday. So earnings is coming out on Thursday. Let's wait on that one, Leo. Okay, what else do we have here? Let's take a look at these 4 stocks here that have been hammered recently. So let's take a look at them. This one's got my attention on Meta. Okay, so Meta, parent company of Facebook, is losing market share. The stock tanks to 100, plays with 100. Today, looks like, let's look at a live chart on, a bigger chart on Meta. Stock charts, Meta. Got the IV shown as well. So the IV is, you know, Friday, this would have been the best time to do it. And we didn't get together Friday, but what I look for is on stocks that announce earnings and they get taken behind the woodshed and beaten severely. And then the next day, the stock has an inside day, meaning that the stock range is within the range of the prior day, inside day. Those stocks tend to go sideways more often than continue moving. So today, what's happened is Facebook is still within the range of the volume spike day. So what that tells me, and the IV's is still hot. The IV's been as low as here, which is 35. The IV's around, 57, 58. So the IV's still hot. It's not as hot as it was on Friday. Actually, it's a little hotter. Actually, it's risen a little bit this morning. And this stock looks poised to go sideways. So what I'd like to think about doing here, what I would really do with it is a balanced butterfly, and then put a broken wing above and below and checkmate it. But shy of those strategies, what I can do is go into searchers, single strategy, and condor. And I want a wide one, 20 points wide on Meta. This is so I've gone into the scanner, I selected at the money iron condors, 20 wide. That's 20 points wide for each. The credit spreads are 20 points apart. And I'm gonna hit search and let's see what comes up. It's sorted by probabilities between the break even. So this first one has a 46% probability. It's a 25-day butterfly, iron condor. This one is an 11-dayer. So I don't know if I want to be in the trade for 25 days, but this is a good place to start. Let's hit the risk graph, and maybe I'll shrink this off. That's a lot of potential return on investment.
Mike, can I speak quickly on Facebook?
Yeah.
Yeah, you referred to it the other day as old book. I would refer to myself as old, but I'm also dead set in the middle of the market, which would be considered old. A couple of years ago, I would spend $3,000 to $5,000 a year on Facebook advertising. I spent maybe $500 this year, And also, I really don't like being on the platform anymore. So I'm going to say that because I don't like it, everybody else that looks like me doesn't like it anymore either. Because I'm so darn average. So it's not going up from here. That's my marketing. If
I
I don't
have
like,
to,
if I don't like it, nobody else likes it.
yeah, I'm being the average human that you are.
The average, the very average human, exactly.
I wouldn't say that at all, but
Sorry,
yeah.
sorry
Well,
about
if that's
that.
your prognosis, then you could say, well, I'm just going to do one side of the iron condor, you know? So
I think
let's
all
do
you
the
might
calls.
need. Yeah.
Yeah.
Cheers.
But I like, thank you for that. I appreciate the humor as well. I can identify with what you just said. So this is a 21-dayer, all right, a 25-dayer. So what I want to do now, I don't want to go out and if I'm making 58,
We are not seeing your screen, Mike.
okay. If I'm making 58%, I mean, I don't mind making 58%, but I got to wait 25 days and count on Meta hanging here. It looks like it's going to go sideways from here. The break evens are wide. The probability of profit is 46%. So what I tend to do is I widen them. I'd rather take less for more probability of profit. Now, there's no one answer. There's not one way to do it. Everybody gets to choose their own sensitivities. But what I'm looking at here is, well, let's first off drop the time and sell less time and take less credit. And let's just say I'm going to do a 2-week iron condor. No, it's actually going to be 18 days. So this is, now let me go a little bit lower than that. Let's do November 11. That's 2 weeks. So let's try a 2-weeker. Not a 3-weeker. Let's go here. November 11th. November 11th. Let's hit risk graph. Okay, that's still offering 34%. Probability of profit is 65%. Why? Why would a 25-day trade have less probability of profit than an 11-day trade? Well, the answer is in 25 days, the stock has more time to move, more time to hurt us. So this is an 11-day. Well, hell, let's look for Friday. Let me check the IV first. Yeah, the IV is coming up a little bit. That's cool. So let's try a 1-week one. November 4th. This is the game. This is the game we play. Risk graph. Well, you know, that's compelling. 11% in 4 days, provided Facebook doesn't break hard. Doesn't look like it wants to. So that's a very nice, viable trade as well, 11%. If you want to go out a week, you can increase your return by what, 23% more return on investment if you go out to November. So either one of those is good. It depends on, I'll post both of these as well as the KRE adjustment after the call, so I don't waste time with that. I'll also put it in the WhatsApp live feed. Okay. So here's 34% waiting till a week from Friday, 2-week trade. IV is a little hot still. That's good. Now, what I'm looking at now is, well, why don't I widen it a little bit? Widen it to where? Well, let's look at support and resistance on Meta. I would at least lift it up a little bit. Now, ideally, we're up here at 120. There's no premium up there. I've already looked. 110 would be good. Let's see where we're at. We've got the 108. So I'm going to lift this up to 110 on the upside, and then I'll drop the 87 down to 85. Where's 85 on this chart? It's right here. So that gives us a bit more wiggle room. Let me do a longer term chart on Meta to see what it's done. I'm going to do a max chart. This is a monthly chart, and I'm just looking in history for support. And there's 85 there. So 85 was support resist. These are monthly bars. 85 is a strong level. Okay, so let's do 85. I'm going to widen it a little bit. Doing an 11-dayer. Edit the trade. And I'm also going to double up the strikes on either side. Sell the 110. Buy the 112. Sell the 85. Buy the 83. I don't know if there's any 83s though. I think there's not. Let me take a look. November 11. Okay, let's see. 80, 85, 80. So I don't have the strikes there. I don't have 83 strikes. So what that will force me to do then is do 80 there and 115 here. This is two credit spreads. Let me highlight them so you can see more clearly. This is the upper. It's 5 points wide.
You've got 110, not 115. Yep.
Yeah, I see that. Yeah, thank you. And then underneath, we'll do a different color. So now we have two 5-point wide credit spreads. By widening them, we're going to get less credit. Let's see what it is. Yeah, so it's still giving us, now it's giving us 15% because we're widening it. So that's what we have in terms of strikes. The one thing I do want to check though is maybe we can do the 86s underneath and get some more granularity. I'm just looking at the strike prices here. 87, 86, 85, and then we get to 80 or 85, and then there are 5-point strikes. So if I sold the 87, I could also buy the 85, and that would give me 2 strikes. So that's kind of what I'm almost forced to do here in order to get a decent amount of credit. So I'll do that. 87, 85. Close enough. And up here, 110, 112. Okay, so now I have two points of distance between the upper and the lower spread strikes, risk graph. There you go, 25% in 11 days, provided Meta hangs out in this very wide backyard. Probability of profit is 70%, which is excellent for an iron condor. So let's see if we can get filled on this bad boy. Meta trade 110.87. So I'm going to do the calls first. 110, 112. I'll change the strikes here. I'll click that there. That's selling the 110, buying the 115. I'll change the strikes in a minute. And then underneath,
You don't have the room in this account.
oh yeah. Can somebody do it for me? I'll tell you what I'll do. I'll post this in the WhatsApp live feed. That way it's easier for everybody to see here. Okay, this is the one I want.
Giovanni is asking, why don't you try 8680?
8680 would
Yeah.
put 6 points beneath between the strikes, and I'm trying to balance this out. So I want to, the reason I lifted it to 87 instead of 85 on the short was to put 2 points in the bottom spread and 2 points in the upper. And so that wouldn't work in terms of balancing the iron condor. You could do that trade, but it's not a balanced. So let me post that in here.
Yeah, we don't have, just to clarify, we don't have a WhatsApp fit for snipers.
That's right, we don't. I'll post it on the boards. But anyway, that's the one. If somebody could try to get a paper fill on that, that would be awesome. Let's see what the price is though, just to see what the price it's going for. 87.85. Yeah. Control, click. 87, 85 underneath. Showing $1.40 credit currently. I got the wrong expiration. Let's get the right expiration. November 11. There we go. It's showing a $2 debit. What the hell? Sell the one November 11. Oh, I got the wrong one here.
I'm showing a 45 credit in the middle.
I
No
see. Yeah,
slippage.
I got it.
Mike, you got the 115 call there instead of the 112.
Yeah, so it's 45 cents. Yeah, 45 cents, 46 cents. That you should get a fill on it. The slippage is very tight on this. So 45 cents would be good, which is 4 cents higher than was available on Tom's Tools. So there you go. 45-cent credit. I can replicate that by taking 4 cents off the upper risk graph. One more. And there you go. That's fillable. 29% return on investment over the next 11 days. A week from Friday, probability of profit is just shy of 70% on this iron condor. So if somebody gets filled, please report. And if you take less than 45, that's fine. I would take 40 on this, but work it, try to get 45 cents. And the way you handle this, the base rules are, you know, let it run to expiration. You can buy back each credit spread for 10% of what you sold it for. GTCs, you could just take each one off individually once you capture 90% of the profit of both, of either. And then if the stock moves beyond the break even and closes there, just close out the whole thing. That's basic rules. But what I'm going to do with this one over time is I'll adjust it. So we're going to play with adjusting credit spreads, 2 of them at once. It's called an iron condor. It's 2 credit spreads. They're 2 points wide, which means I can contract risk out of this one, contract risk out of this one. I can drop this one down. If the stock plummets, starts dropping, it's not going to plummet from here, I don't think. But if it starts drifting down, I can take this winning credit spread here and drop it and get more credit, dropping this break even. There's a lot we can do on this one.
I got filled for 45 cents.
Okay, filled. Awesome. Awesome. So let me save that in Sniper Live. Save. Thanks, Peter. And then we got the Cray fill as well, turning that into an iron condor. I'll put that on the boards in just a bit. That was filled for 19 cents. So those are 2 trades for today. And I could keep going, but I'm not. There's a lot of trades out there right now. Just to give you something to play with, these are ones I was looking at earlier this morning. We've done a nice trade on Northrop. We've got our Cree done Meta. Did we get filled on Northrop? Somebody get filled on Northrop? That's a no. Okay. This is another one. You got, I mean, this is a beautiful, I shouldn't speak like that. As far as rules go, this one is a very good trade. It's got a lot of probability. It doesn't tank with the markets. So I'll post this one as well. Okay. Let's pause for a sec, see if there's any questions, comments. We've got an hour and 20 minutes. I'm conscious I need to keep Go ahead.
Bob has gone up.
Bob is up.
Bob's IV is up. It has to do with weak data on Chinese production.
Let's
Price
see.
isn't changing, but the IV's gone back up.
Okay. In our BABA trade,
Any breakout straddles, Mike? Did you look at those or should we look at those
so
ourselves?
that comes in there. This is, we'll do that at 1 o'clock.
Okay.
This is all sniper stuff here. But yeah, we'll look at that for sure.
Maybe Tom is trading Baba.
Oh man, we're out of this one anyway, the BABA trade. but it's interesting for now. Let me pull up a, it's just for kicks. You know, the problem I have is I could go hours doing this because I like it. And I gotta look. What can we do with Baba? I would say bear, just to see what's there. I don't see any right now because of slippage probably, but let's just construct one. Go to the latest date here. I mean, heck, why not do another 70 call spread on this bad boy for Friday? Let's get some more strikes here. What is available with all this IV? Let's do a 2-pointer on this one. First graph. Look at that.
No sharing.
That's the IV. I heard you. That's the IV on Baba on the Friday options. Right here. And so I just did a quick scan, and there's a 13% trade here. Double wide. Not a trailer, but a, but a trade. 13% by Friday, as long as the stock stays below 70. The IV's there. And based on what Andrew said, that's there because of potential bearishness that's going on in China. It's not pointing to a potential gap up, but that's possible too. You don't know what's going on with Baba and its business practices. Maybe they got something special that's coming out. I mean, we don't know, but the IV is a little suspicious. It's suspicious. Let's take a look at some others too. Let's take a look at Pinduoduo. See what that stock's doing. It's another Chinese. Let's look at some Chinese stocks. See if it's okay. Pinduoduo is up. Neo is another. Let's just do a quick trade on Neo, and let's see if we can see the IV reflected in Neo as it is in Baba.
No.
It's not.
No.
All right, Neo, I would look at 12 maybe. I just want to pull up a chart so I can see the short-term IV. I need more strikes though. Neo. Let's just sell the 11. And then buy the 12. What's the IV doing on Neo? Same. Pinduoduo is probably the same. So IV's up on these Chinese ADR stocks, foreign listed companies, suggesting a break. I think down. Andrew, what do you think?
I'm thinking that they're really gonna be more sideways for a bit, simply because nobody really knows what's happening. Over long term, definitely down, because that's what I see on the charts is that they're just going down. It's and a lot of that seems to have to do with the latest Communist Party games that are going on.
Yeah.
Xi pushed all the business guys into the background, put politicians in the key spots.
But that happened a week ago. And during that time, the IV did spike and then it dropped, and now it's spiking more. So it's not like there's any, let's just take a look here. There is that new announcement this morning. Let's pull up Baba. Okay, China's clipping US shares of China-based companies. I think clip means limit. Let's see. U.S. listed shares of Chinese-based companies took a broad beating on early Monday after data showed factory and services activity in China contracted in October. The iShares China large cap ETF dropped 3% in pre-market, putting them on track at the lowest price seen during regular session hours since October 2008. E-commerce giant Alibaba shed 1.5%. Electric vehicle NEO. So JD, Lee, all sliding. So that's got to be it. That's got to be it. So it's the new more communist leaning government in China is limiting the stock market in China. And so so what that points to is that would explain perhaps the IV spike across the board. And I would say sideways to down as a result. And then
But I
you wanna-
wouldn't get close to these stocks because China has a tendency to surprise us.
Yeah, they do. They do. Let's find a China ETF. What is it? I can't remember the name of the China ETF. If you ever get to that point, you want to say, what are the best Chinese ETFs? You can do a quick Google scan and you can see them right here. Of course, they don't give the symbols in this particular post. Here we go. KWeb is one. MCHI. Let's see what MCHI is doing. Bearish on China makes a lot of sense, everybody. Makes a lot of sense. Let's just do a quick credit spread search on MCHI. Searchers, single, call credit, MCHI. This would have been a good place to start today. Nothing there. I'll go into options, option chains. MCHI, 18 days. Let's look at a stock chart. 38. I'm looking at that peak there, 38. Good place to sell. Let's see. 38. This thing is split, so the strikes are a little funky. That's okay. I don't care about that. I'll just do a one pointer just to see. What's the IV? IV's high and elevated. About as close as you'd want to get. You can get 33% over 18 days. Let's try less than 18 days. Let's see what we can get. That's as far away as that's as close as we can get is November 18, which is a longer term trade. So I would say, look at Chinese stocks right now and capitalize on that IV. Okay, everybody, I could keep going, but I need to stop. What other questions, comments does anybody have? Anybody looking at something else? John Max says FXI. Let's look at FXI real quick. FXI. Similar. This is the Chinese large cap. That's a better one, John. Thank you for bringing that one to our attention. I now remember it. FXI update. Where do I want to sell on this one? 24 would be a no-brainer. Right here. You could even get down to this peak here, which is 23. So let's just try the safest one. And so we got a 4-day trade. Let's try 23 because we can get closer given that this thing expires on Friday. Look at all of the open interest on these. There's a ship with a P load of activity, open interest. The highest is at these 2350 calls. That's massive open interest on this one. This could be a good trade between now. Look at the IV. There you go. IV is spiking big. So there's another potential trade. Not much credit here. 3 cents. The risk though is 50 and your return would be 6%. So if you want more, you'd either have to go to November 11 or drop the strikes a bit more. So those are I'll let you guys all play with those. I don't want to be tracking too many trades, but I think that China's low-hanging fruit right now and the IV's high and it's a perfect time to come in and snipe some of that high IV.
So Mike,
Yeah, buddy.
You know, we have that Chinese stock list, and when I run it through the short term, I don't get anything. What kind of changes can I make to the scanner to begin to get some feedback from it?
Okay, well, first off, what I do, I'll answer your question, but what I do normally is what I've been doing here, is if I don't see anything out of the scanner, I'll just build it myself. If it's not in the scanner, it's probably a slippage issue. Let's take a look at FXI. It's not the case here on this one, but other companies might have wider slippage. So what I do is use option chain. I find my line in the sand, 23 in this case. Maybe I would even do 2250 and get a bit more credit. And I find my resistance level. We can look at BABA as another example. So BABA would be more clear, selling at 70. So that's what I do. And then I build them if they don't come out of the scan. Now, when you run the scan though, searchers, single strategy, call credit. And what you're saying is you have your Chinese stocks. You want to hit default parameters. FXI as an example on BABA. Doesn't matter. There's a lot of them. And it doesn't find any. Now, why didn't it? Well, it could be any number of these reasons over here. Most likely it's because of slippage. Oh, the other thing is, so let's just look where it could happen. So you could turn this off here. It could be that the stock hasn't dropped and satisfied this criteria, which happens when you do short term, it changes. If I do none, actually, if I do long term, it turns it off. If I do short term, it turns it on. So it's looking for stocks that have dropped since Friday. So it could be there. Oh, there isn't a slipper. I thought there was.
Yeah,
a
once I do that, I get FXI and X and AN. Meta.
Okay. Yeah, that's it then.
Yeah.
So yeah, if you ever have questions, you can dig in here. That might be the next phase for some of you, is to dig in and you can actually start playing with parameters here. So let's say you only want 7 to 4 to 14-day trades, not 21 days or 30-day trades. You can limit it by, you want shorter term, you can change that from 30 to 14. So you can play around with this stuff and tweak it until you find trades you like. But what I do is if I don't see them out of the scanner, I know what I want to sell. I want to sell at support or resistance and buy 2 strikes away. If it's a 1-week trade, I don't normally do that, but that's, you can just build them with option chains, option chains, and then grab the expiration that you want and then hit update and then come down here, put a -1 to sell and a +1 to buy over in the, where you see the zeros in the number area. All right, any last questions? I got to get some stuff out the door. All right, everybody, happy Halloween. Good luck, Leo. See you guys. If you're in
Thanks,
earnings,
Mike.
we'll get together again at 1 o'clock.